Hi everyone, welcome back to our channel. Today I am detailed research-based update on global crypto regulations, what's changing, why it's matter, and how it could impact the markets going forward. But number one, what's happening? Major regulatory shape. The global regulatory framework for crypto assets is being strengthened according to the Financial Stability Board (FSB). While progress has been made in implementing its recommendations for crypto assets activities, significant gaps and inconsistencies remains across jurisdictions. In the US, regulators such as the Securities Exchange Commission and other agencies are actively advancing rule proposals aimed at clarifying how crypto assets are offered, sold, and regulated. For example, a major milestone was the passage of Genius Act in July 2025 in the US, aiming to set clear standards for stablecoin, including backing requirement and dual federal state supervision. Meanwhile, central banks and major financial authorities are no longer treating crypto as figure. The Federal Reserve emphasized in recent remarks that distributed ledgers and crypto assets are increasingly woven into fabric of payment and financial system. Number two, why these changes matter. The heightened regulation signals maturation of crypto markets when institutional and regulators engage seriously. That typically leads to more capital but also more oversight and less volatility assets. For example, Q3 2025 saw record breaking derivatives volumes over $1 trillion in futures options combined across major exchanges. For investors and market participants, clearer rules reduce uncertainty and risk of sudden regulatory shocks, which can trigger large market movements. But at the same time, stricter rules can also limit innovations, raise compliance costs, and reduce volatility upside. From a microfinancial stability viewpoint, the regulations aim to manage risks such as custody failures, fraud, market manipulation, stablecoins failure, and cross-border spillovers. The FSB work lays this out. The key themes trend to watch. Number point three, as stable coins regulations has noticed, stable coins has a priority backing requirement. Audits, transparency, and supervision are all on the table. Genius Acts, custody, institutional entry, state trust, and bank times institutional are being unable to custody digital assets under clear rules. SEC no actions letters permitting state charter trust to act as custodians for digital assets. Cross-border coordinations, because crypto does not respect border regulatory cooperation, is key. The FSB peer review emphasizes many jurisdictions still lack consistent implementation. Innovation is oversight, trade-off, regulators policymakers policymakers are aware of the need to support innovation, tokenization, smart contracts, DeFi, while protecting investors. The regulatory agenda reflects these tensions. Number four, implications for the market. Crypto gold for crypto markets. Clear regulations might attract more institutional capital, which can be bullish, but at the same time, enforcement and compliance actions can trigger sharp corrections when a regulator's acts for gold and safe havens. As increased regulations and institutional entry entry into crypto may reduce some flight to crypto as competitions pushing some demand towards metals like gold. For investors in Pakistan and emerging markets, its mean local players should monitor how domestic regulations align with global trends. A well-regulated local crypto ecosystem can improve legitimacy and reduce risk of cracks down on black and banks. Number five, what look for next? Watch upcoming rule proposal by major regulators, SEC, UK's FCA, Singapore's, and MAS about crypto assets offering disclosures and custody. Check for announcement for major central about tokenization of financial assets and how does interplay affects traditional finance. Keep an eye on the regulatory response to innovation hubs, DeFi, NFTs, tokenized real world assets. If regulators act faster than expected, market participants may face compliance shocks. In Pakistan, contact monitor announcement from local authority licensing of virtual asset service providers and how our banks handle digital assets custody assets tokenization initiative. Summary 6 key takeaways. Takeaways: the crypto assets regulatory landscape is undergoing a major shift in 2025 from Wild West to more structured, globally coordinated oversight. This shift carries both opportunity, institutionalizations, more capital and risk, greater security, compliance, and burden. For your channel, covering this regulatory development is critical because the regulations often act as a trigger for big markets moves, sometimes even bigger than the price of Bitcoin or altcoin themselves. Stay ahead by following not only prices chart but also regulatory calendars, policy announcement, and legal rule making development. Don't forget to subscribe for more updates on crypto, gold, crude oil, and world policy impacts. Thanks.